Ladies and gentlemen, good evening and welcome to the Q4 and FY23 earnings conference call of Bank of Maharashtra. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us from the management, Shri A.S. Rajiv, Managing Director and Chief Executive Officer, Shri A.B. Vijaya Kumar, Executive Director, Shri Ashish Pandey, Executive Director, and all General Managers of the bank. I now hand the conference over to Shri A.S. Rajiv. Thank you and over to you, sir.
Thank you, ma'am, and good afternoon to all. Today, our Board of Directors adopted the financial results for the quarter ended and the year ended 31st March 2023 of our Bank of Maharashtra. And we are happy to share our results with all the investors and the results. And this year, particularly the quarter, it was one of the best quarter as far as bank is concerned. And for the whole year, the results is comparatively good. The total, I will share some of the results at a glance, then we can share our question and answer session. And the total business grown by 21% to 4,10,000 crores. And the deposit increased by 16% to reach 2,34,000 crores. And the gross advances increased by 30% to 1,75,000 crores. As of now, the CD ratio is improved to 75%, and gross NPA 2.47%, net NPA 0.25%. With this, provision coverage ratio is reached to 98%. For the current quarter, net profit increased by 136% to reach 840 crore, and operating profit grown by 57% to 1,855 crore. Net interest income increased by 36% to 2,187 crore for the current quarter, and NIM improved to 3.78% as of 31/3. Cost to income ratio improved to 38%, and ROA improved to 1.32%. Our return of equity improved to 26%, and CRAR improved to 18.14%, of which Tier 1 is 14.25%.
Ladies and gentlemen, we've lost the connection of the management team. Please stay connected. We'll rejoin them. Ladies and gentlemen, we have the management team back online. Please go ahead, sir.
Yes. And the return of equity improved to 26%, and the CRAR improved to 18.14%, of which Tier 1 is 14.25%. For the full year, net profit increased by 126% to reach 2,602 crores, as against 1,152 crore for the year last year. Operating profit has shown a growth of 26% to 6,099 crores against 4,848 crore for the year ended 31/3/22. Net interest income for the full year grown at 28%, and fee-based income is increased by only 6%. The main reason was during the current year, because of the shift in interest rates hike, profit on sale of securities was not there. Instead of that, we have given around 180 crore MTM provision for SRs, more than 5 years. That 100% provision we have made. If the provision was not there, there was a growth of around more than 20% provision growth was there. So one-time measure, we have given SR provision of 100%. Cost to income ratio For the full year, it is 39% as against 44% last year. ROA for the full year is 1.1% as against 0.55% for the year ended 31/3/22. Return of equity improved to 20% as against 11% for the last year. So we have RAM sector is the major growth happened, and retail was grown by 23%, MSME is grown by 27%, agriculture also grown by around 25%. So the total RAM sector is grown by around 24 to 25%. Net advances is grown by 31%. So last year up to last quarter we have kept 1,200 crore provision, COVID-19 provision we have kept it. So that provision we have not utilized, and it is kept as it is. It is not considered for capital adequacy purpose also. It is like a floating nature. As and when required, bank may be able to utilize that. So these are the major area of the financials are concerned, and I will give my mic to Mr. Pandeyji for regarding digital area. What is the initiative we have taken for the current year, if it is okay, madam? Thank you.
Yeah, thank you, sir, and good afternoon to all the analysts. Warm welcome in this meet. You would have already seen the bank performance result. So accordingly, to inch up further, both, because bank you would have seen almost, say, for last 1 year or so. So bank is adding up the business in the range of, say, 60,000 to 80,000, 90,000 crores. So that is very much imperative to augment its technology. So first of all, the board has already, adopted and directed to have a budget of more than 1,000 plus crores to augment this technology on various counts. So bank is working upon the 3 important pillars. One is the digital operations. So it means whatever banking operations we are doing, so converting it to more and more technology, whether it is a reconciliation, whether it is reconciliation even not T+1, but whether more frequency within the day. So that is one sort of thing. And so second is what sort of operations can be converted to digital journeys. So bank, you would have seen the 2 press release which has come for this commencement day, 8th of February, and another last month, because now bank has also taken a decision that each month there will be a digital launch day. So many of the things pertaining to these 3 pillars, and the third pillar is digital compliance. So because the compliance is one thing, when it becomes a legacy, it takes a lot of time and the resources as well. So that is what we are thinking, to imbibe all those sort of compliances within the journey itself. So within these 3, we are banking upon, among us others, basically on the 3 things. The one is the artificial intelligence that we are very on the verge of finalizing, so that we will be directly taking up. The robotic process automation, long back we have already started deploying. So almost 10 processes we have concluded, and the 62 approval we had, around 100 we have already identified. So that business process finalization and all is happening. And the third is machine learning, which is analytics, or a deep learning I should say. It is in place with the analytics team in the bank, and that we are using for our soft collections, also for the upsell, cross-sell, and also some of the areas where we have to strengthen or, to understand where our stress book will be. So I think on these 3 pillars which we are working, the 4th is that already, which is in our website, we have come with almost, I think, more than 50 RFPs for our various collaborations and IT initiatives. And going forward, within this month itself, probably you will be seeing some of the biggest, RFPs which we are coming on the lifestyle banking and other things. So in this, again, what we propose, and the board which is deliberated, is that on the business acquisition side, we are thinking for starting with the 5%, not only on the asset and liability, but even on the third party products. So with the starting from, say, 4 to 5% this year, to increase it to almost 25-30% in next 3 years' time. So this is what we are looking from the technological side. And secondly, we have done some very big collaborations on the CIC Pro Second is the CRISIL, which is already in the press news. Another is the Corpository. So we have strengthened our system of appraisals in the bank. And the third where we are using AI. So in brief, this is the total the vision that the board is having, and on which the entire bank, all of us, we are functioning. This is the brief on the technological or the digital initiative which bank is aspiring and the areas which we want to cover. Thank you.
Should we begin with the question and answer session, sir?
Yes, there's one point I forgot to tell you, and the board is already recommended 13% dividend of also for the current year, as against last year it was 5%. Yes. Now we can take up the question answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Ashok Ajmera from Ashcon Global. Please go ahead.
Thank you for giving this opportunity. My compliments to you, sir. Very rich compliments to you, Rajiv sir, Vijay Kumar ji, Ashish ji, for the fantastic performance. I mean, it's not that only one quarter or two quarter after quarter, and in the whole year, you have given one of the best performance, taking the bank total business beyond 400,000 crores. And I think you can be ranked as one of the best bank if you look at least 8 to 9 parameters out of 10 parameters. You excelled exceedingly well. So my compliments to you all, and especially even on the dividend front, going from 0.5 to 1.3, I mean, that's 13%, is also another, big achievement for a small bank like, small in the sense that business, if you compare with other banks, the overall business, like Bank of Maharashtra. Having said that, sir, and even on the operating profit, you have performed well, 1,855 in this quarter as against 1,580. On the provisioning side, sir, the provisions have increased, even though the provision for NPA is not increased much, hardly 7 crore. So, these other provisions which have increased, will you elaborate on that and whether it is going to be the feature in the coming years too? This is one. Secondly, after growing so fast, even in the last quarter, I think the credit growth is almost 29.5% or so. Where do we see the bank, going forward? That are we going to, because still our base is low, so are we going to go on the same pace in percentage terms and making it a, almost totally 100% provided bank with the ROA of say 1.5 or so. So what is our basically the plans for the future of, for the FY23-24? And once, sir, on this Ashish's digital journey, I mean, he has taken us through the digital initiative. Out of this 1,000 crore which has been approved by the board, how much has already been spent till now, and how much do we plan to spend in 23-24? This is just a few observations and questions in the first round, and I think I'll get soon the chance for the second round.
Yes, Mr. Asmira, thank you so much. And first query is regarding provisioning. The total provision for March 23 is 945, as against 582 for December and 365 for corresponding March. You can see that the split we have given in this page number 17 of the presentation, that provision for standard assets is given to 545 crore is the provision for non-performing assets. It is in tune with other quarters also, and basically 0.47 was the net NPA for last quarter, and additional 250-300 crore requirement was given for this reducing the NPA. So otherwise the provision may not be required for in coming years, coming quarter also, because there is nothing to reduce now. Because the 0.25 range we may have to continue as a net NPA ratio, that will continue. So that here I think 200-300 crore provision, excess provision we have made. Second point is that regarding 280 crore provision we have given for standard assets. The standard assets is two components is there. One component is for increase in the growth corresponding to December 22. From December 22, 10 to 15,000 crore standard assets is increased. On an average, it is coming around the 0.5%. If it is come around 7 crore will come for standard assets provisioning. And the remaining provision we kept for cushion, little floating provision we kept it, because when the bank is coming for ECL nature, then next year is RBI is given that to 2024 onwards, bank has to give importance for conversion from the present provisioning to expected credit loss methodology. We are creating certain provisions for standard assets provisioning for moving forward, because once the expected credit loss has to be classified under standard assets provisioning, not from NPA provisioning. So some 150 crore is kept it for that. So it's a floating type nature. So 167 crore non-performing investment is given, 167 is given. That is basically for SR provisioning, because we have some SR that is below 5 years or 3 to 4 years, above 5 years. So that 100% provisioning we have made. So with this, I think we don't have any SR. Right. Now the provision is to be given, 100% we have provided. So otherwise, provisioning in future also there may not have much impact requirement for provision is concerned. Second point is there regarding the growth. Current year the growth was 30% growth was in advances and 16 to 17% for deposit growth. Deposit growth, we have not taken much deposits because wherever possible we have gone for our borrowing window we have utilized, so that slightly deposit growth has come down. And the second point was the interest rate, the market interest rates were also slightly high, so we have not utilized that window. So in coming year 23-24, bank may be able to, as per the direction given by the board, 20 to 22% is the growth rate envisaging by the credit, and 15 to 16% is the growth rate for deposits. The growth rate of deposits of the current year will continue for next year also, but the advances growth is likely we are bringing down, because last year 30% growth rate was there, and the base also year after year base also is increasing. Definitely 2 to 3% we have to bring down the growth rate. So otherwise there is no such problems, and we will continue to grow. And we kept 5 lakh crore business target of financial year of 24. Last year we have kept, this year we have kept 4 lakh crore business target instead of 4 lakh crore business target. Super achievers target of 4,10,000 we have reached. So 5 lakh target is kept for financial year 24, and with this growth rate we may be able to reach that. Regarding the digital, I think our Pandeyji will tell you that correctly. That's what is the
Yeah, Ajmer Sahab, actually the correct for the every year we are thinking 100 plus, and it generally starts from the August, September to the next August. So in this already we have spent I think more than 600 crores, and some of the RFPs are already floated, which are on the wait for the closure. Some are already closed, and some we are going to float another, say, 1 month time. So I think, as we said, the budgeted more than 1,000 plus crores that we will be going to inch up and end up with in this year as well as the next year.
Okay. Sir, if I am permitted, we had certain accounts, they are allocated for 13 accounts, I think about 2,700 crore shortlisted. So what is the status there in NARCL?
NARCL, sir.
This NARCL account list is of course dynamic. It keeps changing every time because some accounts are getting added, some accounts are getting deleted. At present, it is 2,400 crores now. We feel that it is shortlisted for NARCL. Some accounts will come in the first quarter and remaining in the current financial year. So two accounts are already been received in Q4. One is JP Infra and another is Mittal Corp. Of course, though it was an NARCL bid, actually it was won by another ARC in Swiss Challenge, and finally the account was transferred. So two accounts finally done for our bank and remaining now in the current financial year.
Just little more I add along with our GM Recovery and Vijay Kumar here. Total number of accounts shortlisted in NARCL 43. Bank of Maharashtra has got 12 accounts amounting to 2,673. And as rightly JP Infra, that one account is the discussion stage. Remaining 11 in the process.
So, sir, the way we are going, the gross NPA is also expected to be reduced considerably in 24, because that's still, I mean, as compared to what we have provided for, the net NPA has come down considerably to 0.25, but gross NPA is still, I think, 2.47 or something. Is there any major reduction scope in the gross NPA in this year, coming year, 24, I mean 23, 24?
So we will try to bring down below 2.
Okay.
Yes.
Thank you, sir. I'll come back again. I have some other queries also, but just to give the opportunity to others.
Okay.
Thank you. A reminder to participants to press star and 1 to ask a question. We have our next question from the line of Akash Jain from Ascon Global Services. Please go ahead.
Sir, congratulations for a fantastic set of numbers. My question is regarding the gold loan book size. What is your target for the gold loan book? How is the book behaving in terms of delinquency? And what is the yield on the gold loan book and the NIMs that you are enjoying? That is my first question. And my second question is your outlook on the restructured loans. So how is the MSME restructured book behaving, and what is the percentage of MSME restructured book to total advances as on date? That is my second question.
Yeah, gold loan book, total gold loan portfolio of the bank is around 7,000 crore, and we have kept a very competitive pricing for the gold loan because the risk weight is 0. But our average yield on the gold loan is around 7.25% with a 0 delinquency. So that is one good sign of our gold loan portfolio. This comprises both from the retail segment also and the agriculture segment also. Regarding the restructured book, we had only 4,200 crore of total restructured, which are most likely to be come out from the current year because the periods are getting over. Accounts are more or less working fine. There is not much delinquencies are observed. Even in our total SMA, if you see, it is almost 0.45% of our total advances book. So restructuring book is performing well, and there is no major risk on the restructured book also.
Oh, okay, sir. Another question is considering the accumulated losses that you are carrying on your book. So what kind of taxation we can expect in FY24, and your comments on the DTA reversal going forward?
Sir, we do not have any accumulated loss in our accounting book. In income tax, we have an accumulated loss.
Yes.
And actually, we don't need to make any tax provision for that. But whatever the DTA we have created earlier against our losses, that also is already reversal is done. Now, not much DTA is available. It is only the timing difference. DTAs are on book of a small amount.
Okay.
Overall, carry forward losses is roughly 8,000 crore. So it will give us benefit for another 2 years.
Okay. And with regards to credit cost, what would be a guidance since the provision requirement seems to be less now and slippages are also under control? So can we expect credit cost say below 0.5% for FY24?
Yes, it will be around the 0.5 to 0.75 range. We can keep it.
Okay, for FY24.
Yes.
Whatever credit cards you have seen, that is on account of additional provision we have made in order to bring down the net NPA. The goal was what sir told that it will be below 0.5.
Okay. And your outlook on the treasury book?
Treasury book, now that whatever that back patch we have already seen, and you know that now the RBI this time has paused the rate also, and going forward we are expecting that softening of yield. So with this, that we are expecting that not only the yield of the treasury will go up, as well as that we will book the trading profit, and there will not be any MTM depreciation. So overall outlook is good in respect of the treasury.
Yeah. And with regards to corporate credit growth, which are the sectors that has led to this kind of good growth in the corporate book? Earlier, we were focusing on different clusters like pharma cluster, textile cluster, also infrastructure projects, especially Namami Gange. So, going forward now, which sectors are we focusing? Are we continuing the same focus, the sectors we discussed earlier?
Yeah, I think we are continuing.
Yes, it is the same sectors what we have grown that, because where earlier bank has not grown some of the sectors like pharma, loan. This is a LRD area where bank was not having any exposure, little exposure. We have taken LRD and other manufacturing sector, and the corporate sector. The growth is, though it is classified under corporate, the major component is coming from mid corporate sector that we have looking for now. Not these bigger corporates we are not looking for.
Okay. And sir, what is your sanctions pipeline as on date for the corporate book?
7,000. Around 7,000 crore we already have pipeline, sir. Sanction pipeline.
Okay. And fund based, non-fund based?
So basically it is more of a fund based only.
Fund base will be extra.
Non-fund will be extra.
Okay.
Non-fund will be extra, sir.
Okay. So that is all from my side. As of now, I will come back in queue.
Yes.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have a question from the line of Ashok Ajmera from Ashcon Global. Please go ahead.
Oh, thank you. I think Akash is also from my company, and we have been only asking the question to the management. Most of the points have been covered. I would just like to know something about the NBFC exposure of the bank, and how are we placed on overall limit on that, and co-lending, and that where are we heading? What kind of yield are we getting from the NBFC business, and what is our outlook on that, sir?
Sir, and regarding NBFC sector, we are continuously assessing our sanction exposure, and based on that, we are taking decisions as and when required, and we are taking exposure in the top-rated NBFCs only, with a focus of having good return also. That is prime, sir. And regarding co-lending, after having gained experience, we are poised for good growth in co-lending, and we are working on that front along with digitalization of that co-lending process.
What is our total book size of NBFC loan book?
It is approximately 10,000 crore.
Thank you. I request you to come back in the queue for follow-up questions. We have our next question from the line of Himanshu Taluja from Aditya Birla Sun Life AMC. Please go ahead.
Hi, sir. Thanks for the opportunity. Just few small questions. Actually, most of the questions have been answered.
I'm sorry, sir. Can you use your handset, please? There's some disturbance from your line.
Sure. Hello?
Yes, please go ahead.
Yeah, hi. So thanks for the opportunity. Just a few small quick questions. Firstly, given we have seen a margin expansion of 18 basis points in this quarter as well, and as the deposit pricing is catching up, how you see the margin outlook going ahead. Do you see any still further scope of a margin expansion? So that's my first question. Second question is around, are you seeing any signs of withdrawal of the sanction limits of the corporates because of any nature of slowdown in any of the sectors? So that's my second question. And my third question is, how is the pricing competitive intensity at this point from the corporate pricing? So that's a small quick questions, 2-3.
The first one is regarding the margins. I think now as of the present quarter, it is 3.78. I think we will be able to continue with the same range of margins with plus or minus 20-25 basis point here and there. Something it will be about 3.5%. We may be able to keep that. Regarding that, the pricing is also connected with the margin, and the pricing is concerned, and we are looking risk-based pricing only. And even if corporates also, wherever highly competitive corporates, we are not looking for. So the pricing and that reasonable profits or reasonable pricing, people, that type of corporates only, we are looking for that. So the pricing part, as of now, though competition is there, in spite of competition, and our cost of deposit and CASA ratio is high, so it's like we can go with a lower pricing in the market with highly rated customers. That is what we're looking for that. As you are aware that our pricing in housing loans, 8.40 is the lowest in the industry actually. So the same kind of pricing, differentiated pricing will be due for highly qualitative customers. That is the strategy which we are adopting. Now the portfolio also, for example, in housing loans and other things, if you see the portfolio of our housing loan portfolio or that type of retail portfolio, for above 800 is coming, it's a double digit is coming, that 15 to 20% is coming, above 800 number is coming. So the quality is improved. So the strategy of the board is to improve the quality above the operating profit level, so that the provision has to be nil. That is the strategy we are adopting that. The third point is regarding sanction withdrawal. There is no such issues, and we have enough questions, but we are on selective basis only. Corporate selections are doing only selective basis with reasonable pricing. So there is no such issues or concerns. Still there is good flow of corporate is coming, and selective basis we are picking up that.
Okay, sure, sir. So just one small last final questions. When you mentioned that you are expecting the margins to range between plus minus 25 basis point in the coming fiscal year, I understand the downside triggers for the margins. If 25, what would be the margins uptick trigger according to you in the coming year?
Why I am keeping that 25 basis margin plus or minus, because as you are aware, when the 48 to 50% of the RLLR is based upon the external benchmark. So RBI is already post the rates, and we don't know, maybe one more quarter they may pause, and chances are there the interest rate cycle is coming down, then definitely the rates may started coming down 25 basis or 50 basis point each. Definitely this will impact the RLLR. So then when the prices are coming down, definitely that transfer of pricing has to be happen. So that is why I used the 25 basis point here and there we told, but with the 3.50 range bound is kept at the margin. And we feel that 3.5 to 3.60 is an IM is one of the good margin actually. That is why we have used that wording that.
Okay, sure sir. Thanks a lot. Thank you.
Yes.
Thank you. We have a next question from the line of Vikram Damani from Damani Securities. Please go ahead.
Hi, good afternoon. Am I audible?
So your volume is a little low.
Is it better?
Yes.
Okay. Congratulations on a good set of numbers. I just had a question with relation to taxes. Year on year on a percentage basis, it's fallen significantly, and even on a quarter basis, There doesn't seem to be any sort of consistency in terms of percentages. So if you could throw some light on it. I understand you said you had 8,000 crore worth of carry forward losses, but going forward, what can we expect? If you can just explain this a little bit. Thank you.
Regarding taxes, what figure you are seeing in the profit and loss, this is not the outgo of any tax liability. This is the reversal of DTA that we have done. When that we are writing off the account and over in the provision, so whatever DTA you have created on the disallowed provision, that has to be reversed once you are writing off that. So because of that, there was a tax liability in the form of DTA reversal. And since because we are holding 8,000 crore carry forward losses, so even though the taxable income may come, but it will be adjusted by the whatever that losses we are having.
Okay, so that's a good thing to come from a double pass. Good to know. That's it from me. Thank you very much, and congratulations again. It's been a great quarter. Thank you.
Thank you. We have our next question from the line of J.K. Jain from J.K. Jain and Company. Please go ahead.
Yeah, thanks for the opportunity, and congratulations for a very good set of numbers. One question: when we have got a capital adequacy ratio of 17-18%, then where is the need for further capital infusion? Is it just a resolution to be in hand? Because it was said that in the first quarter about 1,000 crore rupees of equity will be raised. And second question: what will be the price of the equity? Because the company is now just looking very good. So if you dilute the capital, already about 2 years back the capital was diluted and the equity was doubled. So a bank of your size having an equity of 6,000 crore rupees looks a little embarrassing, while you are showing a very good set of numbers. But if capital is diluted, so it will affect shareholders. So your view on this, please.
Yes, this capital adequacy ratio is now 18.14%. And what you told is correctly, it is correct that ratios will be affected because of the high equity of 6,000 crore. But that is already already happened, and the Government of India's equity investment is already done. But for this growth is concerned, now the present rate is low, it is 18%. When the bank is wanted to grow at the 20 to 22% range, if you grow, the same profit itself may not be sufficient to keep the pace of the growth. So what we thought, it should be 50-50, that whatever the growth rate is coming, 50% growth rate will take care of from the additional net profit generated during the years, and the remaining has to be funded the capital through either borrowing or for equity. So over a period of time, this 7,500 crore umbrella provision is given by the board is only for 2 to 3 years growth capital is concerned, because the Government of India, and we don't want to require any kind of capital from government also. But when the equity, when we are raising that, this is only for growth capital. But you can see that ROE, if you see the bank is able to go at the rate of 20-22% ROE, it is one of the best return for the equity holders also. So for the time being, to reach, then second point is that regarding SEBI guidelines, bank has to follow, it is a compliance issue. By 24, we have to bring down to 75%. So this capital raising process is mainly for reducing the shareholding of the Government of India to below 75 over a period of time.
So you can do one thing, that Government of India disinvest their percentage instead of bloating the equity capital of the bank of your size, and which is progressing so fast and so good. Because I don't think there is any other bank in India which has got a virtually negative NPA and such a good profitability and all these things. So why? Because I have seen that in all the PSUs, the capital is so high, like your bank and Canara Bank and all these things. So it's high time that when the conditions of bank has improved because of the very good work done by people like you and in other banks also. So you can impress upon the government that they should, if they want the money, and they want to keep it below, say 80%, they disinvest. Why the banks suffer?
I think that the government also may look into that. We will see that because they are also getting the opinion from different sides.
Okay.
I think how they may think we have to. I think already some of the market participants are already, as you have suggested, they have already suggested to the government, and they may look for that. That is my feeling.
In any case, what will be the rate of, if suppose you issue shares in the first quarter, what is your expected rate for the shares? I think at least maybe 40, 45 rupees, something like that.
No, that depends upon the SEBI valuation has to be seen.
Yes.
So that depends upon the value. We have to see that. For this issue, actually, we have planned for last quarter also because of the value was not there, so we have postponed actually. So postponement anytime it can happen. There is no, if it is not good, definitely it will postpone that. Definitely that.
So would you say that the result which you have shown in this quarter, this fourth quarter, it will be bettered in the first quarter of 24? We can jolly well feel that.
Yes, as of now it will be better. As of now, because we don't know things that from the present point of view of the results, I think we can have a better results. That is what we are expecting that.
Okay, another question, very small question. It's out of my curiosity, because we generally see that NIM is usually 4%, 5%, 3%. But I usually talk to people and I say that the banks are having a margin of 60%, 40%. Because if you are lending at 9 rupees and getting fund at 6 rupees, so I will say you have got a margin of 50%. Why you banks people are saying that we have got a NIM of 3% only? What is this statistical calculation? Can you highlight this, or can you throw some light? Why don't we say percentage operating profit? That should be the percentage of gross profit. When we talk about any industry houses, we say this company is earning a profit of 30% gross margin. Why banks all over the world, they go for 3%, 2%? It looks very low. If you start saying that yes, we are having a margin of 40%, the prices of shares and stakeholders will go up like anything. Your view?
Yes, that we may have to look into that. I don't have any, because these are market practices are there generally. But we will, if you have any suggestions, we will look into that. If any kind of disclosure is required, that we will do that.
It is a question not to you, but question to the general fraternity of the banking sector,
yes,
particularly from the American side. Thank you, sir. Thanks a lot.
Okay, one thing is that it says that major income of the bank is from the interest income. So
right,
the other parameters are also measured in that interest based on the interest income. That's why the NIM, etc. it is coming into picture. And one thing we should not forget that there are the operational costs that can be also factored in percentage term.
Thank you. We have our next question from the line of Jayesh Shah from OHM Portfolio Equity Research. Please go ahead.
Hello. Thank you, sir, and big congratulations for excellent results. I just wanted to clarify. I don't know if I heard it right. Did you say you have 1,000 crore of capex expense budget for digital infra? And how much of this, you said you spent some 600 crores. So is this 600 crores coming into PNL or it is capitalized?
No, it is the total budget, both capital and revenue. And we used to calculate in that way that how much we are going to have an IT spend, IT and digital now put together. So actually both it is collective only.
I see. Can you give a breakup of capital and revenue expense of the 600 crores that you spent in FY23?
I think you can take it around, say, I think 60-40 right now. Because now not many RFPs are already floated in last 1 year. And some of the RFPs are going to be floated in next 1 or 2 months. So that is the reason that since you are going to acquire the software, so the first year, what is the license cost and other things will go into the capital, and then 8 years AMCs and other things will go into the revenue.
I see. So 60% will be the capital expenditure and 40 will be revenue.
It will be in between 60-40 or 70-30 range it will come, mainly for AMCs and other things. Then depreciation also will one of the part, it will come. because within 3-year period we may have to write off. That means one-third you have to write off that. Yes.
I see. And this 600 crore will go to 1,000 crores for the next 2 years, each year.
Yes.
I see. Okay. Thank you very much.
Thank you. We have our next question from the line of Akash Jain from Ascon Global Services. Please go ahead.
Sir, my question is the recovery from return of accounts. So as on date, what is the accumulated return of accounts amount, and what is the recovery target from that? And my second question is, since we are taking many initiatives, especially on the process fund, making it digital, so is there any scope of improvement in cost to income ratio? We are already having one of the good cost to income ratio. We are one of the most efficient banks. But is there further scope of improvement?
Yeah, I think you can recovery in return of accounts is at present it is 1,000 crore. It is almost 5% of what is the stock, and we expect same 5 to 6, 7% in current financial year also, around 1,200 crores.
Okay, I think last quarter it was around 18,000 crores total return of.
Stock is of course the write-off stock, rightly said by you, 18,000. It is growing also. Now it is 20,000 crore.
Out of that 1,000 crore we have recovered the current year.
Yes.
I think the same
5
to 6% range will continue for future years also. It's a continuous process.
Okay. And last quarter also we had a discussion regarding excess SLR. I think it was last quarter it was around 5 to 6,000 crores. So as on date, what is the excess SLR we have? Would it be used for improving CD ratio?
4 to 5% excess SLR is still it is there. So that around 12,000 crore excess SLR is there that we can utilize for borrowing, or it can be converted to for credit purpose.
Okay. And what is the target we are having for CD ratio?
CD ratio is now around 75%. So 75 to 78% is the target we have kept it. 78% is the ideal according to us at present.
And any plans to rationalize branches?
Yes. Branches, this is a continuous process. Last year also we have rationalization done by 30 to 40 branches, either merged or we have closed, and another 200 branches we have opened, new branches in different districts. So this year also, this is a process same way, because loss making and those branches where compounded annual growth is below 5% for continuously for 5 years. So especially rural branches, all these things, those branches will either be closed or it will be merged, or if it is a loss making branch. And correspondingly, we will open 200 branches. Permission is already given by the board for the current year. So now, as of now, 2,203 branches is there. So by FY24, I think we may be able to reach around 2,400 branches.
Okay. And any
yes.
Any comments on NCLT? Any recovery expected through NCLT resolution?
Yeah, NCLT, one big account of Srei is there, where now we are expecting in the current financial year. DSKDL is there. 2-3 small accounts are also there. But Srei is one big.
So when are we expecting recovery from this?
It should happen in current quarter, or at the most up to September.
Okay. Thank you, sir. All the best. That is all from my side.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We have a question from the line of Ashok Ajmera from Ascon Global Services. Please go ahead.
Thank you for giving the opportunity once again. Sir, I would like to discuss a little more on the treasury side now, because it can give another good fillip now to the profitability of the bank after having seen in this quarter the losses. in both, if you see at the segment, also the treasury has this quarter has given the loss. So now since the rates are stabilized and the RBI has taken a pause, now how do we see the treasury operation going ahead and giving us what kind of roughly the profitability, so that other profitability being intact, this will add further to that. So any color on that? I mean, how much are we estimating, and our modified duration also has come down. So I think we should have a good operating profit from the treasury operation.
Yeah, Ashok ji, you rightly said, during this period when the yield was on higher side, we have accumulated 8,000, 10,000 that securities, where the yield is above 7.5%. So now since the RBI has paused the rate, and going forward that it is expected the yield will further soften. So this would be right time to earn the good trading profit. Secondly, in previous year we suffered most because of the MTM. With the softening rate, the MTM was not there. And second, and one thing is that if you see our overall M duration, it is below 1.25. So this will also help in keeping the check on the MTM. So going forward, there will not be much MTM, or the MTM will be nil. And by selling the securities, when the yield is softened, the bank will earn good profit. So you can expect good contribution from treasury side in the current financial year into profit and loss account.
Are we looking to park, if we have a proper liquidity, the funds into the CP where the rates are comparatively higher? The yields in CPs you are getting, especially 6 months, 9 months CPs, I think you are getting anything from 8.75 to 9.25 in A-rated, well-rated companies. Are we looking at that opportunity?
It will depend on what is the lending demand. If the lending demand is there and we are getting good rate, so we will prefer to put the fund in the lending instead of the putting in treasury. You know that treasury, the rate you will not get what you are going to get in lending. Having said that, we will explore the good opportunity, and at appropriate time we will purchase security and sell it. So that trading profit we are going to do. And good thing is that if you see this financial result, in quarter you will see that treasury yield has also gone up from 6.04, it has gone up to 6.34. So with this accumulation of the securities, that not only the yield will go up, we will have more opportunity to earn the trading profits.
Okay, sir. Sir, a little observation. I was just going through one note on that fraud account, where the total amount of last year of 933 some odd crores has come down to 735 or something. I don't exactly remember the figure. So is that the recovery from the fraud account, or when it was already 100% provided for, what is that exactly, and where it has come in the profit quarter or this year?
No. The fraud which has been identified of 933 crore, this includes also the unrecovered interest. But basically we make the provision only for the balance which is outstanding. So 735 crore is the balance which is outstanding. Against that we have made a 100% provision.
Only for clarification, this provision has not made during the current year. We are holding the provision, and that since it was declared fraud, same provision is carried out.
Right.
Okay.
Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Shri A.S. Rajiv, Managing Director and Chief Executive Officer, for closing comments. Over to you, sir.
So thank you so much for all support given by you, and once again thank you, madam. And if any further questions or any clarification anybody needs, please let us know that. You can send it the query, and we will respond that immediately. And once again, thank you.
Thank you. On behalf of Bank of Maharashtra, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.